Everyone, Stephen Brooks here, and I teach those who manage their own portfolios, whether they're beginners or pros, whether they're traders or investors, how to generate a six-figure salary from that portfolio. Now, the way we do that is we focus on one particular strategy in one particular product. And not only do we focus on one particular strategy and one particular product, we also aggressively eliminate everything else away from that. Now, the method I'm going to teach you today, I call it the SPX Settlement Trade. It is one trade and one product. However, it is not the actual trade. It is not the system. It is not the strategy that I teach in my six-figure salary system. However, for those of you who just want to start to get into this, you want to start to generate income from your portfolio as opposed to hope that it builds up over 10, 20, 30, 40 years. If you're somebody who's looking to generate income from your portfolio, this SPX settlement trade should take you no more than 10 minutes a month, and it is absolutely fantastic results. So without further ado, let's go ahead and dive right in. Here we have the SPX settlement trade, and it's stinking simple, right? Every single month, there is a monthly options expiration, right? That will typically happen on the third Friday of each month. Now, occasionally, if that third Friday of the month is a holiday, it will be on a Thursday, but 95% of the time, there is a monthly expiration the third Friday of every single month. So the day before the monthly expiration, we will do this trade in the last 15 minutes of the trading day, which is between 3:45 and 4 p.m. Eastern time. All we're doing is literally selling a 16 delta $5 wide iron condor. That's all we're doing. And we're doing it, you have to be a little bit careful on this because there are PM expirations every day in the S&P 500. But in the S&P 500, we have to do it the day before the monthly expiration in the AM expiration that expires the next morning. Now, again, I'm going to show you how to do this in about a second, so don't worry about it too much. But it's super, super important that if you're going to do this trade, you're doing it, in the last 15 minutes or so of the market being open the day before the monthly expiration, and you're going to sell this 16 delta $5 wide iron condor in the next morning's AM expiration. Now, the nice thing about doing a trade in the S&P 500 is that the S&P 500 settles directly to cash. So what that means is once we open the trade, right? Once we put the trade on, we're done. We don't need to close it because it will expire to cash the next day. So really quickly, let's go into the platform and let's kind of show everyone what this looks like. So I'm in the SPX right now. I am looking to trade the S&P 500 cash index, right? That is what I am looking to trade. Now, I'm doing this on January 5th. What you can see here is that monthly AM expiration is not for 13 days. But if you're going to do this trade, you want to become familiar with which of these expirations that happens on the monthly expiration is that AM one. Now, at least on Thinkorswim by TD Ameritrade, which is now Schwab, I guess, the platform I use, it notes to you which the AM expiration is. So you want to make sure that if you're going to do this trade, again, the day before the monthly expiration, between 3:45 and 4 p.m. Eastern time, that you're doing it in that AM expiration. So I'm going to do a little bit of a think back here. And back in November of 2023, the monthly expiration was on Friday the 17th. So going back to November of last year, if I wanted to do this trade, I would have done it the day before that monthly expiration. And in this case, it would have been the 16th of November. So I'll click on that and I'm already there. And here's what you would have been able to see at the close of the market on the 16th. You can see we're in the S&P 500 and we have all these different expirations. We have two that expire the next day. which as of shooting this video were those monthly expirations. We have one that is noted as weekly, and we have another that is noted as AM, right? So if I was able to take the DeLorean back in time, and I was able to go back to November 16th, 2023, and I was looking at the market towards the end of the day, I would be choosing this one because it is the AM expiration. So that's the first part, right? About 3:45 p.m. Eastern time, the day before the monthly expiration, we gotta go to that AM expiration, right? This will not work the way you want it to if you don't use that AM expiration. Then what we do is we sell a 16 Delta $5 wide iron condor. So what does that look like and how do we do that? Well, I have pulled up that AM expiration options chain right here. And you can see I have the bid and the ask, and I also have the delta, right? I don't know on your platform, if you don't use Thinkorswim by TD Ameritrade, I don't know how you would go ahead and find delta on your platform, but it's definitely available because it's one of the 4 options Greeks. So the way I find it is I click on this little thing right here. I go down to options, theoretical, and Greeks, and I click on delta, right? That gives me that information. Now, what delta is, there's a whole nother video on that, but all we need to know is where is that 16 delta, right? So first, we'll do the call side. We have 26 delta, we have 20 delta, and we have 16. So again, what do the rules say? Sell the 16 delta $5 wide iron condor. So in order to create an iron condor, we have to sell a call credit spread and a put credit spread. So let's do the call side first. So in order to sell a call credit spread, we will sell one call and buy a further out of the money call to create the spread. So in this case, I want to sell the 16 delta. So I will hover over the bid and I'll click on the bid. Now to turn it into a $5 wide spread, all I have to do is buy the next out of the money call option. So the way I do it is we've just sold the 45.35 call. That means we want to buy the 45.40 call. So I hold down on my control key. I click on the ask of that 45.40 call, and that creates a spread for me, right? 16 delta, $5 wide. 16 delta, $5 wide. But to create an iron condor, remember, we do the call side and the put side. So all we're going to do now, can we use the computer properly? Yes, we can. All we're going to do now is the same thing we just did on the call side, we're also going to do on the put side. So let's go ahead and locate the put option where the delta is closest to 16. We have 28, we have 20, we have about 15, and we have 10. So the one that is 15 is what we'll do. So we'll hover over the bid, we'll hold down the control key, and we'll click on the bid. Now that's selling the 16 delta put, but we have to do a $5 wide spread. So we want to buy the next out of the money put option to create a $5 wide spread, because you see the difference in strikes in the S&P 500 is $5 wide. So we sold the 44.90, and then we're going to buy the 44.85. We hover over the ask of the 44.85 put. We hold down our control key, and we click on the ask. Then, of course, you go ahead and you send this order. And like it says here, the trade will expire to cash the following day, so there's no management. So once you set up this trade, once you place this order, and once you're filled, you're done. Cool? All right. So again, SPX Settlement Trade, within the last 15 minutes or so, the day before the monthly expiration, right? More times than not, like 99 times out of 100, that monthly expiration is going to be the third Friday of each month. You should definitely check though, because once every maybe 2 years or so, that third Friday of every month is a holiday, in which case it happens on a Thursday. So just pay attention to this. We're going to sell the 16 delta $5 wide iron condor, and we're going to do it in the AM expiration, Become very familiar with figuring out, if your platform doesn't explicitly tell you this, become very, very, very familiar with the AM expiration if you're going to do this. So 16 delta, $5 wide. That's what we did. Go ahead and send it off, get filled. And then once you're filled, you are done. Now, let's talk about the results. It's easy to set up. If you're not familiar with credit spreads or an iron condor, honestly, the best way to learn it is just do it like 10 times in a row. Watch a video on how to do it on your platform, and then literally just do it like 10 times in a row. It's like riding a bike. Once you get it, you won't forget how to do it. But here are the results of doing something that will take you no more than 5 minutes a month. We've done this trade since 2007, since actually January of 2007. I've been doing this one personally since I think about 2009. And as you can see, the results are quite good. So here's a back test that we did going all the way back to January of 2007 till I think July or August of 2023. I don't remember. So there were 197 trades. Out of those, 166 were winners, about 85%. Pretty good for literally 10 minutes a month worth of work. The most consecutive winners we had in a row was 28. That means there was a period in time of doing this trade where you won consecutively for over 2 years. That's good too. There were 31 losses out of 197 trades, which is about 16%. And the most consecutive losses we had in a row was 3. Now, during this time, we also have to factor in commissions because when we trade options, there are commissions involved. When it comes to the S&P 500, they're typically about 65 cents per contract. So in the test, there were $512.20 worth of commissions. So we took up the total profit, which includes winners and losers. We subtracted from that the commissions, and it comes out to 10%, 10.13% per trade, which is basically 10% per month in less than 10 minutes a month. That's pretty good. And again, how do we do that? We literally show up in the last 15 minutes of the day before the monthly expiration. We literally put on a 16 delta, $5 wide iron condor, and then we do nothing. And with that giant, valiant effort of 5 to 10 minutes a month, with that giant effort of 5 to 10 minutes a month, you win 85 times out of 100, and the average, which includes winners, losers, minus commissions, is about 10% per month. Now, here's how the numbers actually look, because some people could say, well, 10% per month, whatever, but here's just a comparison of what that looks like compared to the buy and hold model. Again, I teach people how to generate income today. I don't work with anyone who wants to build up a nice nest egg over time. I don't do that, right? I teach people 6-figure salary, make money today, tomorrow, make money that day, the next day, make money that day. I don't do the buy and hold model. The SPX Settlement Trade literally beats the crap out of the buy and hold model. The red line is the S&P 500 buy and hold model from 2007 to, I think, the summer of 2023. The blue line is the percent return of the SPX Settlement Trade using just one contract. Which would you prefer? Like a 200% return, which by the way is good. It's better than 0. It's better than a negative number, or a 2,000% return. So the result of literally doing this, take a screenshot, literally doing this, the same trade at the same time, every single month in the exact same product, you get these results, which actually translate to something that looks like this. Pretty good. Again, I think you'd be smoking some serious crack not to do this. Now, so everyone's going to say, okay, how do I get started? Awesome. So the first is you need to understand when the trade is going to be taking place, right? It's going to happen the day before the monthly expiration every single month. Again, most times, the monthly expiration is the 3rd Friday of every month. But you want to make sure that that is true every month. Again, the goal is to do this. You might as well take it seriously and just figure out each month when this is. Now, once you figure out when it is, you want to schedule time on your calendar to be available from basically 3:45 to 4 p.m. Eastern time to be able to place this trade, right? You want this, take it seriously. Book time on your calendar. Set the intention that this is what you're going to do every month. Again, one trade in one product at the same time every single month. It's hard to mess that up. Now, once you're there, for example, and you're going to start either on the paper money account or the simulated account or one contract, right? You want these results. The best way to not get these results is to get too big too soon. The best way to get these results is to start small and build up from there. So you're going to know when the trade is. Again, it's the day before expiration Friday every single month. You're going to schedule time on your calendar so you don't miss it. Again, take it seriously, please. And you're going to start with either the paper account or one contract so you can get used to actually physically clicking the trade at the right time and seeing what happens. Now, once you build up some confidence, maybe you've done it once, maybe you've done it twice, maybe you've done it 3 times. The question's going to be, how big can I get with this? Well, we have an answer for you. We have portfolio plans that are for those looking for conservative, moderate, or aggressive approaches. Now, before I get into those, I have to kind of state for the record why we came up with these plans and what these numbers look like. The conservative approach, going all the way back to January of 2007, the largest portfolio drawdown was 20%. Now, since 2007, the buy and hold model, which sucks compared to this trade, did experience a 50% drawdown during the financial crisis of 2008, 2009, and I think like a 38 or 40% drawdown during that March of 2020 COVID fiasco. So the conservative approach, which I'm going to show here in a minute, had a drawdown that was only 20% compared to the market, which was 50. We also have the moderate approach, which had a max portfolio drawdown of 30%, which is still way shallower than the largest drawdown on the pathetic S&P 500 return compared to the SPX Settlement Trade. And then we have an aggressive approach, which was a 40% drawdown, which is basically a little bit smaller than the financial crisis max drawdown and in line with what we saw during March of 2020's whole COVID fiasco. So again, I'm going to show you these. A lot of you are going to be drooling from the mouth and goo-goo and goggling and oh my God when you see these plans. But suffice to say, like, you want these results? You do? You got to start small and build up from there. But once you get some confidence under your belt, you've done this a couple of times, I do think it's okay to work towards these portfolio plans, but not start there. Agreed? Cool. Okay. So the conservative portfolio plan, again, that was done, and the math behind it was done to have a 20% maximum loss, right? You want to risk about 9.5% of your portfolio per trade. Now, the question is, how do we determine how much we are risking on a given trade? Well, it's really simple. The way it works is this. We take the maximum, we take the width of the spread, and we subtract from it the credit we received, right? So in this case, we have a $5 wide spread, and we collected $1.20. Now, everything in options land, you can take it and multiply it by 10. So although we are collecting $1.20 worth of credit, that is really $120 per spread. And that is the most amount of money we can make on this. So we have a $5 wide spread minus 120. That means on this trade right here, where we're collecting $1.20 worth of credit, our maximum loss is $380, right? Is $380. So on a, let's say on a $10,000 account, if we want to do this conservatively, and again, the previous results were only a 20% portfolio drawdown, risking 9.5% of the portfolio per trade, right? The way to think about it is this. $380 is the most amount of money I can lose on this trade. That is my maximum loss. So when it comes to risk per trade, right, we basically want to be able to do this as many times as we can so that the risk per trade is either equal to 9.5% or probably even less. So the way to do this is this. So I have $10,000 and I multiply by 0.09, what's that number? 9522. And basically, I can do this as many times as it would allow me, as long as my risk is equal to or under $952. And on this particular trade, we are risking $380. So I take that 952.2, I divide it by 380, and it gets us 2.5, which means 2. It does not mean we round up. It means we round down. So 2 on this bad boy. So if you have a $10,000 account, you can do it twice. If you have a $100,000 account, 25 times. That whole deal. You get it. So going back to this, we can risk at the most on the conservative strategy 9.5% of our portfolio. Going all the way back to 2007 on this, which includes the financial crisis, COVID, 2022, all that stuff. If we started with a $10,000 account, did this trade, which is the same trade at the same time in the same product every single month, less than 5 minutes a month, we turned an account from $10,000 to over $83,000, which as a percentage return, non-compounded, 838%. Actually, scratch that. It is compounded. 838%, a profit factor of 2.321, and a return to drawdown ratio of 41.92. What that means is the maximum loss was 41.92 times smaller than the overall gain. And in terms of a chart, here's what it looks like. Very smooth, very up to the right. As the portfolio gets a little bit bigger, we're able to compound because on a $20,000 account, 9.5% is more than on a $10,000 account. And on a $50,000 account, 9.5% is more than on a $10,000 account. So for those who want to go the conservative route, which is really like a 20% max drawdown on the portfolio, you want to, again, start small. You have to do that. And then build up to the point where you're risking 9.5% or less on your portfolio. And we just showed you how to go ahead and do that. Now, if you want the moderate approach, which is working up to risking 13.5% of your portfolio, the numbers are better. But again, let's go back to the actual numbers and break them down. So let's say I have a $10,000 portfolio, and this trade is really the capital requirement is going to be $380. What was it? It was 13.5? 13.58. Right? If I wanted to do this with a $10,000 account and I wanted to do the moderate approach, I can do this 3 times, not 4, 3. You always want to round down. And just by doing that, again, the same trade in the same product at the exact same time, every single month, 5 minutes a month, literally doing that, we took the account from $10,000 to $252,000 for a 2,521% return. Now this time, the return to drawdown ratio is 87, which means the maximum loss was 87 times smaller than the total profit. Pretty good. And of course, the equity curve, when we risk a little bit more, starts to get a little bit more out of hand. Then we take it finally to the aggressive portfolio, which says we can risk 19.17% of the portfolio on this trade each month. So let's break that down again. What was it, 19.17? Right, so on a $10,000 account, once I get my feet wet and I try it out on paper account, I try it out on one contract, and once I build up my confidence a little bit, I can get to the point where I'm risking, about 19% of the portfolio on the trade, which based on the fact that this trade is risking $380 per contract, I can do this 5 times. Very simple. Now the result of, again, getting to that 19.17% of the portfolio being risked on any trade, now the numbers start to get a little bit out of hand. So we took a $10,000 portfolio all the way up to $887,000 for an 8,700+% return and a return to drawdown ratio of 219, which means the maximum loss, or the worst it got, the worst case scenario of how it got, was 219 times less than the total profit. Pretty good. So again, very simple. Here's how you do it. Literally, in the last 15 minutes of the day before the monthly expiration cycle, we log into our online platform. We make sure we're going to the AM expiration. It's critical. If you mess that up, this trade's not going to work. We sell the 16 Delta $5 wide iron condor, and then we are done. We do nothing else. We do nothing else. And the result of that is pretty good. The trade wins about 85% of the time. The average trade is over 10% a month. It smokes the buy and hold model. And then if you want to do this and you want to build up to some sort of a portfolio plan, you got to start small. You got to start small. Don't be crazy. Don't be ridiculous. I want you to be doing this for years. The only way you won't be doing this for years is if you get too big too soon. So just don't do that. Don't be dumb. But once you've done it a couple times, build up to a portfolio plan. If you want to do the conservative route, 9.5% of your portfolio. If you want to do the moderate, 13.5% of your portfolio. And then if you want to go super aggressive, 19% of your portfolio. So again, folks, I'm Stephen Brooks. I teach those who manage their own portfolios, whether they're beginners, traders, investors, have a ton of experience, have no experience. I teach them how to generate a very reliable six-figure salary. And again, the way we do it is by getting them to focus on one strategy in one product and aggressively removing every distraction, any potential distraction outside of that. This trade right here that we showed you, the SPX Settlement Trade, it's not what we teach in the six-figure salary system. However, the results are really, really good. So if you are someone who is looking to start to generate some sort of consistency out of their portfolio, and not just consistency, but generating income consistently from their portfolio in something other than, a 2% dividend or a 3% dividend or a 4%, money market. This is something that should take you no more than 5 minutes a month. It's stupid simple to be able to do. Plus the results are really, really fantastic. So again, if you're interested in learning how to generate a very reliable six-figure salary from trading, less than really an hour or two a day, go ahead and click on the link that is below this video. Schedule a call to speak with either me or my team, and we'll see if you're a good fit. And if not, hey, get started with the SPX Settlement Trade. Start generating some income from yourself. And if you like this video and want to learn more of my awesome trades, because this is definitely better than anything you've seen before, go ahead, give it a like, subscribe, click the bell, share it with your friends, all that good stuff. And I'll see you in a future video.